So, if you've been keeping an eye on crypto lately, you've probably felt it. There's this chill in the air, right? That explosive momentum. It feels like it's hit a patch of ice, and confidence is, well, a little fragile. So let's get into it and figure out what's really going on here.
Yeah, this is the big question, isn't it? One minute, everything's looking great. The next, it feels like the whole market is just holding its breath. So in this explainer, we are going to break that down piece by piece and find out why. All right, so here's the plan. Think of it like peeling an onion. We're going to start with the big picture, the whole macro environment. Then we'll zoom into Bitcoin, check on the altcoins, see what the big companies are doing, and finally, we'll get right down to the code and some fundamental questions about the tech itself. Okay, first up, let's set the stage. Because you gotta remember, crypto doesn't exist in a bubble. And right now, pretty much the entire financial world is, well, they're walking on eggshells. What we're looking at is kind of like a perfect storm of caution. You've got uncertainty over US monetary policy, investors are tapping the brakes on accumulation, those ETF inflows have cooled way down, and basically everyone is waiting to see what the Federal Open Market Committee, the FOMC, is going to do next. And that's the key thing here. A lot of this hesitation, it's not even coming from inside crypto. All eyes are on the Fed Chairman Jerome Powell. Whatever he says next could send ripples through, every risk asset out there. And you better believe crypto is right on the front lines, just bracing for impact. All right, so let's zoom in a bit. How is all this big picture anxiety affecting the king, Bitcoin? Well, that general nervousness is putting some very, very specific pressure on its price. And check this out. There's this one number that everyone is watching, $116,963. Now, why that number? Well, on-chain data shows it's a massive cost basis cluster. In plain English, that means a ton of people bought their Bitcoin right around that exact price. And that, of course, adds a little drama to the whole thing. You're hearing analysts say this level absolutely must hold. It is the line in the sand. If we break below it, we could be in for a much, much steeper drop. So what you've got is this classic battle playing out. On one side, you have that huge wall of buyers, and they're all trying to defend their entry point. But on the other side, you've got traders who got in lower, and now they're taking profits. It's this tug of war that has Bitcoin kind of stuck in this tight range, and you can just feel the tension building. And, of course, when Bitcoin catches a cold, the rest of the market gets the flu. The altcoins feel it, and usually they feel it even harder. Remember all that talk about a big altcoin season? Yeah, that's gone completely silent. You can literally see this in the data. Take a look at Google's search interest for altcoins. It has just fallen off a cliff. It went from a peak interest level of 100 all the way down to 15. The public hype, it's just gone, evaporated, and it's not just search trends. The official data backs this up too. The altcoin season index, which is a really key metric here, it's plummeted to 41, and you need to be above 75 for it to be a real conferred season. What's different this time around is that the big Bitcoin rally was mostly driven by institutions. And it seems like that big money just isn't trickling down into the smaller coins the way it has in the past. And yikes, here's the damage report. We're talking major tokens like ETH and SOL seeing double-digit losses for the week. And just look at XRP, down 13% after some huge holders sold off 460 million coins. It is now just clinging to that key support level at $2.85. The pain is definitely being felt all over. Okay, so the market's in this delicate spot. How are the big corporate players handling it? Well, it's interesting because they are not all on the same page. In fact, we're seeing some completely different strategies start to play out. You've got two fascinatingly different playbooks here. On one side, there's Gemini, the Winklevoss twins company. They're pushing for an IPO even though they are losing a ton of money. Then, on the complete opposite side, you've got Cathie Wood's ARK Invest, and they're doing the exact reverse. They're doubling down, buying the dip, scooping up millions in crypto stocks while they're cheap. And to really get why Gemini's move is such a gamble, you just have to look at the numbers. In the first half of 2025, they brought in around $68 million in revenue, but they lost a staggering $282 million. That's a huge jump from their $41 million loss the year before. So clearly, they're hoping this IPO can bring in the cash they need to steady the ship. All right, for our last section, we're going to go even deeper. We're zooming past the markets, past the companies, and all the way down to the code itself. Because some of the pressures we're seeing are starting to raise some really fundamental questions about the tech. So first, let's just quickly get on the same page with a critical term, the 51% attack. This is basically the nightmare scenario for any blockchain. It's when a single person or group gets control of more than half of the network's computing power. If they do that, they can cause all sorts of chaos, like stopping or even reversing transactions. It's a huge, huge security threat. And listen, this isn't just some abstract theory. The privacy coin Monero just had a very real brush with disaster. They had to fight off exactly this kind of attack. And that incident, as you can imagine, has really shaken the community. It's forcing a very serious debate about making some pretty radical changes to Monero's core design. And the options they're looking at are not easy fixes. We're talking about things like merge mining with Bitcoin, which would kind of piggyback on Bitcoin's massive security, or even grafting on security features from a totally different coin like Dash. Let's be clear, these aren't simple patches. These are major, major architectural overhauls. And that brings us to this really powerful quote: "The halving math doesn't lie." This pivots the conversation from Monero to the biggest one of all, Bitcoin. Because while Bitcoin isn't facing an immediate 51% threat, there's a different sort of slow-burning security question that's starting to bubble up.
So here's the deal. Right now, Bitcoin miners get paid with newly created Bitcoins. That's called the block subsidy. But as you probably know, every 4 years, that reward gets cut in half. The long-term plan has always been that eventually transaction fees from users will be enough to pay the miners. But as that subsidy keeps shrinking, people are starting to ask a really uncomfortable question. Are transaction fees alone going to be enough to secure this multi-trillion-dollar network long-term? So when you step back and look at all of this together, you see an entire ecosystem that's being tested from every single angle. You've got pressure from Wall Street's macro policies, pressure from trader sentiment on the exchanges, and pressure coming from the very code and economic models that these things are built on. So the real question now isn't just when is the market going to turn around, it's what will break under this pressure and what's going to emerge even stronger.